Hey everybody, welcome to another episode of the show. Today we have Blake Modersitzki, who is a managing partner at Pelion Venture Partners. He has served on several public and privately held company boards. He was managing director of Novell Ventures and vice president of corporate development for Novell. Previously, Blake held global sales and marketing positions at WordPerfect and earned his bachelor degree in economics at BYU. So welcome in, Blake.
Thanks for having me. Excited to be here.
I'm sure that's just scratching the surface of it. I'm excited to dive into the story. Well, typically what I like to ask my guests first is to talk a little bit about your upbringing. So anything, knowing who you are today and what you've done, anything in your childhood or teenage years that molded you or influenced you to be who you are today?
Wow. So I grew up in southeastern Idaho on a farm. So my dad had about, 5,000 acres growing up. We raised wheat and barley and hay and beef cows and all that kind of stuff. The life of moving sprinkler pipe, picking rock, fixing fence, all that kind of stuff. So there was a journey where I thought I was going to be a forest ranger. Like my freshman year in college, I was a wildlife management major. I thought, hey, how cool would it be to drive around in those like polyester green outfits?
Oh, yeah.
And a pickup truck and like look at buffalo and elk. That's what I thought I was going to do. And, it's interesting, the evolution of where I sit today, but like my upbringing was amazing. Little small town in southeastern Idaho. I used to tell my kids I graduated in the top 10 of my class. And then my wife informs them that I only had 21 kids in my graduating class. So, but I was still in the top 10.
That's right. That's right. That's awesome. I love it. Yeah, small town. Sounds like you worked a lot with your hands, learned hard work, good values. So love that. Mentioned you at the BYU. So what was your mindset coming from high school into BYU? I mean, you're obviously, in an entrepreneurial position now, doing investments. But what was your mentality? Did you want to be an entrepreneur? Did you have a path in mind? What were you thinking going to school?
It was an interesting journey. So my freshman year in college, I was a wildlife management major, and then I took a couple of years and I went and lived in New York City. And the impact of what I'll call Wall Street and business, it sparked something that I was intrigued by. And so when I came back and I ended up going to BYU, I don't think it was anything around entrepreneurial. It's like, look, I want to understand the global economic environment. Like, why does the world function the way it functions? And that led me down a path where, out of no strategy, but, back in the 80s, technology is not what it is today. And my now wife, then fiance, was working at this company called WordPerfect. For all of you who don't know WordPerfect, you should Google it because it was an amazing business here in Orem, Utah. They controlled, call it 90% of the word processing market. Like they were the leader. They got disrupted by Microsoft when Windows came out. This was in a DOS world. But I kind of got this vision, but I think really where the entrepreneurial spirit started was I can roll all the way back to my father and even my grandfather who, albeit farmers, my grandfather grew up as a fisherman in Poland. Like these guys ran their own businesses. I don't think I fully appreciated what entrepreneurship meant back then. So I think it's always been there. I just had to find that journey, and BYU, economics, like all that kind of stuff was impactful. And then working for WordPerfect, which like it was a $100 million a year startup. It was a private company, but they were very much entrepreneurial in their journey.
And what was your role with WordPerfect coming out of school?
So I actually was a security guard.
Okay.
While I was going to school, needed a little part-time job, I was a security guard. Then when I graduated, they offered me a full-time job in their sales organization. And so I jumped into their sales organization and lived in Halifax, Nova Scotia, wow, New York City, Seattle, before having an opportunity to move back here in the early 90s to run a piece of their business outside of the U.S. We lived in Utah, but I spent a lot of time in Europe and in Asia.
Okay, got it. And ultimately, so then transitioning to Novell, was Novell acquired WordPerfect? Is that what ended up happening?
Novell acquired WordPerfect, and it was an interesting journey because like I had gone from working in sales and marketing and product management, and I kind of moved into this role around corporate development. So I was doing some partnerships, some M&A work. I actually ended up selling off a piece of their business to a company in Belgium. And through that journey, Novell acquired them in, I think, 94. A guy named Eric Schmidt from Google fame came to Novell to be our CEO in 1996. And through the conversation and getting to know Eric, because I was working in corporate development, Eric had gotten approval to have Novell have a $300 million corporate venture fund.
Got it.
And he gave me the opportunity to run that corporate venture fund. We did both direct investments, and then we invested into venture funds as a limited partner. Got to be real honest with you. I had no idea what he was talking about. No idea what venture was. So back in the 80s, well, first, there's a whole history around venture, but it was very much a cottage business, not well known. And Eric had some experience at his, he was the chief technology officer at Sun Microsystems. And he's like, hey, I want to do this. So I ended up stopping at, there used to be a Barnes & Noble on University Avenue. And I found the only 2 books on venture capital I could find. And I read those books. And that was my introduction in 1996 to venture.
Yeah, I love that. Was that just Eric kind of seeing you as your talent, your like a vision within you, or why did you think you fell into that role in terms of running that internal fund?
Eric was, first of all, Eric's one of the smartest individuals I've ever met. And he also, he would take a chance on people. I think it's 100% chance. Eric gave me a chance. I'll always be grateful for Eric. And then there's, another gentleman named Chris Stone, another gentleman named Carl Ledbetter. All of those guys, they kind of looked at me and said, hey, look, you like people, you interact well with people. We trust you because you actually did something really hard for us. I sold off the linguistics business for Novell. We couldn't get an investment banker. We couldn't get anybody's interest. And I just kind of, the company who ended up buying them, I actually flew and sat in the lobby waiting, without an appointment, waiting to meet with the CEO just to kind of move the ball forward. So I think it was, they realized that look, as my dad used to always say, don't leave the field until the work is done. I kind of had that mindset. So I think they kind of looked at that and they gave me a chance. And then it was up to me to figure it out. And that was the next journey for me, is to figure out what this venture was.
Yeah. So how long had you been between WordPerfect and Novell with the company prior to starting off in the fund with their internal strategy on that?
Yeah. So I went to work for WordPerfect in 1989.
Okay.
Actually got married and started literally the same time. Worked for WordPerfect, and they acquired, Novell acquired them, I want to say in 93, 94. So then I worked for Novell, and I just had a variety of different jobs. And in 96 is when Eric came to Novell. I'd gotten to know him, and kind of over the few months that I'd gotten to know him and did this project for them, that's when they started the venture fund in 96. So I ran it from 96 to 2002.
Okay.
Eric left Novell in about 2001 to go be CEO of that company called Google.
Yep.
And by the way, everybody out there, in 2001, Google was the 15th best search engine company. There was a lot of other companies. It was not clear Google was going to be what it was going to be. And I remember having the conversation with Eric when he's telling me he's going, because Eric was an amazing mentor for me. And he I was sad to see him go. And then, I actually started looking around for kind of what am I going to go do next? I can stay at Novell. And by the way, they're kind of going to transition out of the venture fund. They thought they wanted to keep the venture fund, but without Eric kind of being what I'll call the vision in making sure that we continue forward. And by the way, it was a very successful venture fund. We returned a lot of money to Novell. It was kind of funny. There was one instance where I get a call from Treasury going, okay, our other income line is pretty high, and we're having to explain that to the street. Will you come talk to us?
Yeah.
So that was great. And then it was actually through the founder of Excel Partners, so a guy named Jim Schwartz, that I met Jim Dreyfus at Utah Ventures in 2001. And Jim and I started having this conversation, and I joined Jim in May of 2002, and that kind of launched what is now Pelion today.
Okay. So Utah Ventures and Jim what was their stage when you came into that and you decided to jump ship from your current job at Novell?
So Jim started Utah Ventures in 1986. His first fund was $10 million. He did a lot of life science, a lot of spin out of universities. He raised his second fund about a decade later. It was about $50 million. Then when I joined Jim in 2002, he had just closed on his third fund, which was $120 million, but hadn't made any investments. So, the business was, a lot smaller. I think we had a team of 7 people. We did life science, technology, a little bit of everything. Mainly focused on the Rocky Mountain region. And so when I joined Jim, it was the evolution of, do we want to keep with this, what I'll call a regional focused fund, or do we want to expand that strategy? And I had a ton of my network was in Silicon Valley. And so I started bringing that deal flow, those connections. And so, I kind of look at it as when I joined Jim, we were about $100 million in assets under management.
Yep.
7 people. Roll forward to today, we're over $2.5 billion in assets under management, and we have a team of about 30 people. But we've always stuck to early stage. Probably about 15 years ago, we evolved to exclusively doing only software. So we stopped doing life science, medical devices, green technology, and we only do technology.
Got
software.
It. So going back to Novell, you kind of fell into that role as fund manager of the internal fund. And by the way, was that balance sheet capital, or were you guys raising money?
No, it was all balance sheet capital.
Okay.
Yeah.
So you kind of fell into that role. You went to Barnes & Noble, got those books. But why continue in venture? Did you really enjoy it? What made you want to make that a career?
Yeah, it was an interesting. So in 2001, 2002, that's when I really had to make a decision. And what I concluded was, one, I loved the investing side of things. I loved the impact of working with entrepreneurs. And, entrepreneurs are a special breed. They're amazing. They're wonderful. They're crazy. They're insightful. They're setting out to dent the world. Like, these guys are making companies. We were an early investor in a company called Red Hat. Well, Red Hat was worth billions of dollars before they were acquired by IBM. And I just, what I concluded was I loved the energy. I loved the excitement. Probably the one thing that I had to get used to was failure. In early stage venture, failure is pretty high.
Yeah.
Not just for us, but the industry in general. Companies don't make it. And it's not necessarily that there's, bad people or anything. It becomes a nice to have versus a have to have. You never achieve product market fit. That's failure.
Yeah. And I'm curious, how do you deal with that from an investor relations standpoint, investment? You're going to have some losses, right? Especially in tech and in venture. But how do you guys cope with that? Is it just, hey, let's focus on the wins and let's try to explain the losses the best we can? Or how do you guys combat some of those losses that you've had?
Yeah. So, first of all, our investors are mainly institutional. So pension funds, endowments, banks, they're big institutional investors. So they understand what I'd call the loss ratio inside of early venture. The other component is, honesty, transparency, and trust building. It's a constant. Why should this person trust us? And so you have to really be thoughtful about that. And then the failure side of it, at least for us, what we've decided is you build your reputation off of really hard things. The companies that are going extremely well, that's amazing. But it's when things are rough, when things are hard, not only with your entrepreneurs, because think about it. If you have a company that's not going to make it and you abandon that company, well, that's terrible. Those entrepreneurs are going to talk and you'll start to build this reputation. So we're always trying to be thoughtful where we work hand in hand with those entrepreneurs, because the journey of success is as much about a roller coaster as anything else. Like, I was just talking to one of my partners last night who's in Chicago for us, and we were having this conversation where today we got several companies that are just doing amazing, but we know from history, next week they could be like having all sorts of issues.
Sure.
I mean, we had one of our companies that was it was on a tear, and one of their customers was FTX.
Mm.
Well, we all know what happened to FTX, fraud, and what happened there. That cost that company 50% of their revenue. And that CEO, we spent more time with our arms around that CEO saying, dude, we're going to be fine. Like, this is not your fault. And that company today is like, we're on a path to recovery. It's doing well. But, last year they did, $40 million in revenue. FTX hit. This year they're going to do half that.
Yeah.
And it's rough. It's hard.
Right.
But you can't abandon those companies.
No. Yeah. And it sounds like, yeah, it's all about transparency. Honestly, we're in the investment business as well. And yeah, having that communication and helping investors understand that loss ratios, it sounds like you're doing a great job of that. So, okay, going back to Utah Ventures, you joined 2002. When did it transition to Pelion? I mean, what was that? What was the driving force there?
Yeah, so this was, right around 2008, 2009. Yeah, so Utah Ventures, Jim had shortened the name when I joined him to UV Partners.
Okay.
So it started in 86 as Utah Ventures. He shortened it to UV Partners. And what we were running into was, people thought we were the economic development arm in the state of Utah. UV, do you guys do ultraviolet? All that kind of stuff. It was just like this nondescript. And so we thought, look, let's take a step back and where I give my partner, Jim Dreyfus, who retired in 2014, is he just kind of looked at me and said, dude, whatever you want to do, let's do that. And so we went on this journey to rename the firm. I don't know if you've ever tried to name something.
I have.
It's hard.
It's very hard.
It's so hard. And like finding the URL and that journey. And so we landed on this. It's a Greek name. It's a mountain in Greece, Pelion. And we thought, look, part of it is just going to be like what we do on a go-forward basis, but it's going to eliminate some of the confusion in the ecosystem. So that's why we did it, was to eliminate some perceived confusion back then. I still have I still talk about Utah Ventures and UV Part. That's our history. I mean, Jim, by the way, started the very first venture fund in the state of Utah in 1986. Like, he was a pioneer and a visionary.
Yeah, I was gonna say. I mean, in 1986, even early 2000s, for raising like $100 million for venture and early stage investments is a big feat. I mean, today it's like, that's pretty common, but 20 plus years ago, that's pretty amazing.
Yeah, when I joined Jim in 2002, I think there were 2 other venture funds. One was associated with Zions Bank, and the other one was a kind of an upstart venture fund here in town that doesn't exist anymore. So, yeah, I give Jim a ton of credit. Like the thing that Jim did is he had firms like Excel and NEA and Venrock and a bunch of these bellwether firms that he utilized as great mentors. The great thing when I started in 1996 with Eric was I spent time in Kleiner Perkins, Sequoia, Benchmark, Excel, like all these great firms. That's where I learned the business.
Yeah.
Like, my mentors were the founders of those firms. I remember sitting in Excel's offices and Kleiner Perkins' offices and Benchmark's offices and just listening to them. And first of all, they were gracious enough to let me do it. Now, granted, they all loved Eric, so I benefited by association for sure.
Sure.
And Carl Ledbetter, who's another he was my partner, so he was at Novell with me. He was our senior vice president of corporate development. Eric and Carl were the 2 investment committee members for me. Then Carl joined me at Pelion, and then he retired in 2018. Well, both those guys They worked together at Sun. Carl was CEO of an Excel Sequoia-backed company. So he had guys like Doug Leone and Jim Schwartz. If those names mean anything, they're kind of the bellwether pioneers on his board. So I think that's where we really benefited is we utilized that mentorship.
Yeah, it's so beneficial. So I'm curious, Blake, what was kind of the vision that Jim gave you, in that first meeting you guys had, and what was your role? Was it, hey, you're going to come in and be a partner with me, you're going to have ownership, here's the upside? What made you want to take that jump? What was attractive about coming into Utah Ventures at that time that got you excited?
Yeah, well, Jim Schwartz, who's the founder of Excel, he was the one that introduced Jim and I, and we started this dialogue. And at the time, I was talking to a firm in New York and in the Bay Area and in Boston, and these are big platforms, like multi-billion-dollar platforms. And I was talking to Jim, and Jim he was a regional fund, but Jim's like, look, I know this firm can be bigger than what it is. And what I'm looking for is both a partner and also somebody who's younger than me that can really take this and run with it. So Jim gave me a lot of latitude. And it was really interesting. I was not interested in going to Utah Ventures. I was actually going to go to New York. I'd lived in New York. I'd worked in New York. And I was having this conversation with my wife one evening because I was going to get an offer from this firm in New York. And I was kind of, slow rolling Jim. The Olympics were coming to Salt Lake. Jim was involved with the Olympics of '02. Jim was slow rolling, all that kind of stuff. She's now 30, my oldest daughter, but she was 10 at the time. And her bedroom was across the hall from our bedroom, and she'd heard my wife and I talking about moving to New York. So I go in to say goodnight to my daughter, and she's crying. And I'm like, all right, what happened at school? The dad comes out of me. And all she said to me is, Dad, I don't want to move. And I tell you, talk about something where if there wasn't a crystal clear answer to what we should do. So then I called a couple of other people on the phone, the founders of Battery and a few other firms, and I said, look, here's what I'm faced with. And this guy named Rick Frisbee, who's the founder of Battery, said to me over the phone, he goes, look, Blake, you can either join another firm and be, the 15th partner and just be a contributor. And by the way, he knew Jim. He said, or you can join Jim. And look, if you fail, it's on you. So I appreciated that. But you get to drive something here that could be pretty impactful and amazing. And you're young enough that, you fail, you can find another job. All of those things started to come together. And, that was the journey to join Jim. I will tell you though, after the first week at the firm, I was like, holy cow, there's a lot of heavy lifting. I whip out my Motorola flip phone. That was the technology. And I call my wife. I'm like, we might be unemployed here pretty soon. Anyway, I went in and talked to Dreyfus, and Jim's like, first of all, we're going to be fine. Second of all, this is going to be an amazing run, and we get to do this together. And that really is kind of, I thought about back to my farming roots. For those of you who are farmers or no farmers, you can have a great crop and a hailstorm can wipe you out, and you just have to figure it out. And so I kind of just boiled down to, what? FIO, figure it out.
Love it. How old were you at that time you joined Jim?
So I was, I was 36.
36.
Yeah. So I was 30 in 1996 when I was handed essentially the
Novell reins.
And by the way, I thought I was old, experienced. I look back now and I'm like, oh my gosh, who was crazy enough to empower a 30-year-old to run $300 million?
Good for you. I love that.
And by the way, Eric and Carl and those guys, they were amazing. They were wonderful, but they threw me into the deep end of the pool. I remember presenting to Novell's board of directors just being scared to death. And it was not easy, but you learn a lot about yourself.
Yep, you sure do. So what was headcount when you joined Jim at Utah? Was it just you two, or were there a couple folks there?
So there were 7 of us.
7 of you guys?
Yeah.
Okay. And your role, so were you coming in kind of in like, hey, a managing director, you're running the ship, or were you one of several partners? What was your role day one?
Yeah, so there were 3 other partners.
Okay.
So I joined, and it was interesting. Jim's like, look, we'll bring you in as a partner, and it was kind of a trial basis. We'll see how you do over the next 18 months. We think you're going to do great, but can you find great deals? Can you source? Can you contribute? Can you help us raise all those sorts of things? And so, like, I kind of bet on myself. I said to my wife, I go, first of all, the way we're set up, in 18 months, I could be gone. Like, it was an 18-month, you're a full partner or you're out. And that's how it kind of started with me. So there were 3 other partners. Me, we had an associate, a CFO, office manager, and a receptionist, and that was it.
Yeah, love it. So I want to. So you had about 120 million to deploy. Sounds like when you walked in. I guess what was, I mean, your first deal that you guys or that you remember? You know, when you started there, Novell Ventures, now Pelion.
Yeah. So my first deal I did was a company called Riverbed Technologies. Bandwidth optimization, super cool and innovative back then. And what was interesting is, so the Series A investors were Excel and Lightspeed. So at Novell, I was an LP and on the advisory board of both Excel's funds and Lightspeed funds. So I knew Chris Sheppy, who was the managing partner at Lightspeed, Jim Schwartz, who I've mentioned a couple times. And so I leveraged that relationship to get into Riverbed. It was a very competitive situation. Company had 0 revenue. We led the Series B round of financing, invested $4 million into the company. And the first board meeting I went to, and you can bleep this out, but it's universally known. It's called the oh shit board meeting. That's the first one you go to when you figure out, oh gosh, all this stuff I learned during due diligence. Yeah, there's a lot of skeletons that you learn about. So I go to this board meeting, and the VP of engineering comes in, we get an update, and he said, hey, we fired up our first data center with our software that was running on Dell boxes, and we caught the data center on fire.
Man.
And then we took a break, and I literally went into the bathroom and threw up.
Oh, man.
Jim Schwartz walks in, and he sees what I'm doing. He puts his arm around me. He said, we're going to be fine. I'm like, dude, we lit a data center on fire. What's going on? So anyway, we go back in. The fix was this software ran the processors of these Dell boxes. The fans could not keep up with how fast they were. And so they'd heat these boxes up, overheat them, and there you go.
Wow.
Anyway, got that fixed. Roll forward. That company went public in 2006. $600 million. By the time lockup came off, it was worth $3 billion. Our initial $4 million plus 2 follow-ons, we had a total of $8 million invested into that company, returned a little over $200 million on a $120 million fund.
That's insane.
Yeah, it was amazing, but
oh my gosh. So, I mean, that's maybe an outlier. I don't know. I don't know. But like, so when you think about that fund, $120 million fund, what are your target returns? What is your multiple? What are you telling to your investors? Even today, I guess, like what are your goals in terms of investment to what you can speak to?
Sure. So on a net basis, so this is, this is money we return after fees and carry and all that kind of stuff. This is money back to our investors. On a multiple basis, it's 3 to 5x multiple on your money, and between 25 and 30% net IRR. Those are our goals and our objectives. We've been successful across all of our historical funds. So, funds 3, 4, 5, 6, and 7 to be sitting at that. But early stage venture, it's measured by kind of the end of the fund, because at any given time, you can have a 50% IRR and you can have a 5% IRR.
Right. And
it'll go back to 20. Like during the year 2021, and the stock market was roaring, and like it was super easy to have a big IRR. Today, interest rates have gone up. The lots of things that are happening at a macroeconomic, from wars to all sorts of things. Like, it's all come down. So early stage venture is in that doldrum, which honestly, I've lived through a couple of market corrections. Now is an amazing time to be an investor in early stage. So those are our target returns, and we've been successful in hitting all of those with all of our active funds.
Yeah. And you to clarify, you invest out of a fund vehicle.
We do.
Right? Across the board.
Yep.
Are you doing any SPVs or outside, one-off bolt-on type
Yeah.
stuff?
So our structure, we raise a pool of capital and we use that for early stage investing. And all of our LPs are investors. Then we have a pretty robust co-invest program. And our co-invest program are for our later stage companies. And we do those through SPVs. And we basically turn to our existing LPs or our existing investors and say, great, thanks for betting on us for early stage. We're taking all that risk. Here's a company that has in excess of $50 million in revenue, growing at 50% or greater, what we call kind of through the knot hole. And now it's more about pricing risk. And if we believe the pricing is sufficient where we can with that SPV. So there's single asset vehicles. That's how we do. So we do that as well. So
got it.
Yeah, and it works well.
So you're on Fund 7. Is that
Yes.
where you guys are today?
Yep.
So how big is that fund?
Fund 7 is $370 million.
$170 million. And when are you closed with that? Have you finished the raise on all of that?
So yeah, we're closed with that. We're at the tail end of investing,
okay.
And obviously there's probably not a lot I can talk about our next fundraise.
Yeah, sure. No, that's great. And you mentioned raising capital, Blake. It sounds like I'd love to hear from the early days with Jim. 10 million up to 120 when you joined, and now 370. I guess how have you? What has helped you be successful in raising money for those types of funds?
So Jim's and this is most venture funds. In the early days, your primary limited partners or investors are individuals, and that was true. Across, like when I joined Jim, I think 90% of his investors were individuals, 10% were institutions. In fact, I remember we only had 2 institutional investors when I joined. And so like the growth of the investor base, you have to morph from individuals. By the way, we still have lots of individuals, but they only represent less than 5% of our money. And the only reason we still have individuals is I kind of have this view where, hey, look, they bet on us. They took a chance on us. And by the way, you can be an investor with us, as long as you're a qualified purchaser. And we won't turn you away. We don't market to. You have to get to the institutional investors. The institutional investors, can you make money? Can you access interesting companies, source great deals? And then reputation matters. By the way, we do things that are unpopular. We say no a lot. We'll look at 1,000 companies a year and we'll invest in 10 of them. So, how, by the way, when we say no to somebody, we fully admit we make mistakes.
Sure.
I mean, I joke with Josh James all the time. Like, we turned Omniture down. And when Josh went public, I sent him a text and I said, dude, you can say I told you so all day long. And he actually sent me a text and he said, dude, at least you told me no. Like, I appreciated that. So we always be thoughtful about that. But it's really, there's this great book that somebody gave me a long time ago called The Go-Giver. And I'm not much of a business book guy. I love to read things on World War II and, great leaders, like all of those sorts of things. And this book, but the premise of the book is if you give more or if you give with no expectation of a return. So it's not a conditional give. It's an unconditional give. If you do that, it's amazing what happens. And so we've always tried to take this approach with our investors. You have to build trust. With entrepreneurs, you have to build trust. Well, trust takes time. And, Jim used to say, hey, it's a lifetime to build a reputation. Jim Dreyfus, a lifetime to build a reputation, 5 minutes to destroy it.
Yep.
And so we talk about that all the time because it's a hard business.
It is.
Yeah.
It's very hard. And I love that book, by the way. That's a really good book that you mentioned. How did you transition from the individual investor to the institutional investor? So like when you came in 120 million, mostly was individuals.
Yeah.
How did you make that leap? Because I think that's a goal that a lot of fund managers have, is to transition. And it really is a necessity once you start doing larger deals. I mean, raising more than 100 million from individuals is very, very, even 100 million. I mean, it's very challenging.
Yeah. So it's you just like it. You just have to what I'll call be persistent. So during our Fund 3, between Fund 3 and Fund 4, we use that time to meet with institutional investors and tell our story. What's different? What's unique? Why partner with us? So by the time we got ready to come back around to raise Fund number 4, they had seen us multiple times and in some cases had built trust. And then you need one thought leader. We had this great firm called Portfolio Advisors. Portfolio Advisors is, by the way, the managing partner there is a gentleman named Brian Murphy. He's seen as a real visionary in the industry. And I'd actually met Brian because we'd co-invested into a couple of venture funds when I was at Novell. So I'd met him a long time ago. And I remember he said, look, we're going to commit $10 million to they were our first big institutional investor. We're going to commit. And he said, if you do your job, I'll support you in multiple funds. If you lose money, you and I will still be friends. Like, I appreciated that. And I said, okay, fair enough. And, but like each fund, we've added 1 to 5 new institutional investors, but it's hard work. Look, maybe it's this farm boy attitude in me is, you just don't show up and have a bumper crop. You got to prepare the field. You got to work hard. Like all that sort of stuff has to come into play. But you got to get one of them to say yes, and then others will say, oh, okay, well, if he's willing to take a chance, we'll take a chance.
Yeah, exactly. Yeah, it's a little bit of a snowball effect.
Yeah.
Are you guys? Is it all organic? You're going out to LA, you're going out to New York, you're making these trips, you're networking, or do you hire third party to help source LPs or pensions or other groups, or how have you guys successfully getting in front of these
outside
groups?
the U.S., we hire third parties to help us. They call them placement agents.
Yeah.
And then there's been an organic component. Like for example, we raise a lot of money out of the Middle East. So think Dubai, Abu Dhabi, Saudi Arabia, that part of the world. Well, we never had any strategy, but we had a group out of St. Louis called Washington University. They're endowment. They're an investor in our 4th fund. The chief investment officer got recruited by ADIA, which is the Abu Dhabi Investment Authority. He was on our advisory board. I was a reference for him. Well, he shows up at ADIA. He introduces us to a gentleman named Ahmed El Mosa, who ran their venture program. Ahmed loved our story. Interesting enough, Ahmed had done a bunch of research on the state of Utah and thought, that's going to be a really interesting spot. So ADIA made a commitment to us, and that just kind of was a snowball effect in that part of the world. So today we have multiple sovereign wealth funds and family offices and banks. So there's an organic relationship component of it, but we do hire people outside of the U.S. In the U.S., we've just kind of done it ourselves.
Yeah, that makes sense. And what would you say is like a typical investment for size for an LP for you guys? It's a $370 million fund, or 10.
So our institutional investors range from call it $3 million to $30 million. That's the size, the check size, and it's really like the big sovereign funds, the big pension funds. They write bigger checks. Family offices, they'll write, in some cases, smaller checks. What's great about family offices is most of our family offices are people who have been entrepreneurs, have been wildly successful, and now they're turning around and, they're looking at investing into people who further entrepreneurship.
Yeah. Yeah, love that. Yeah, it's great. I mean, there's no silver bullet to raising capital. So I always like to ask people that because it's just interesting to hear your guys' strategies and how you're doing it. So for Pelion, what makes a good investment for you guys?
Yeah. So we look at three things. And, we start off with how big is the market? By the way, we have to see clear line of sight to a multi-billion-dollar market. There's a lot of great businesses that fall into $100 million. And those are great businesses. You should do those. But for us, because of the loss ratio, we got to have big outcomes. How disruptive is the technology? Like, what are they disrupting? Riverbed. By the way, what Riverbed did was Cisco was already doing it. But I remember the CEO presenting, and what he said was, we speed data up 10 times faster than the speed of light. Now, for you physics majors out there, that's impossible. But what they had invented was pretty novel. And then, I'd say 70% of our decision is based upon the individual and the entrepreneurs. We've been very fortunate to back people like, Brandon Rodman from Weave and Blake Murray from from Divvy, Josh James from Dome. I can go down, David Flynn, Rick White from Fusion.io. I can go down the list of amazing businesses. Today we're investors in this company called LiveView Technology. You may see the LVT on the Jazz jersey.
Oh yeah.
Ryan and team over there are amazing. Curtis Anderson at NERSA. What I'll tell you about all of those guys, first of all, they're amazing individuals. Second of all, they've built wonderful teams. So for us, the team is such an important component of what we invest into. But you have to have the first two, because you can be an amazing entrepreneur, but if it's not in a great big market with disruptive technology, we'll pass.
Yeah, that makes perfect sense. And I guess for you guys, talking about investor check size, but what's your typical investment size, and at what stage are you typically investing?
Series A is our sweet spot.
Okay.
We look to own 15% of the company. Check sizes could be 5 to 15 million. It just kind of, if a company is raising $10 million in a Series A, we'll probably do 7 of that.
Yep.
And then look, we love seed stage funds. We love angel investors because a lot of times we'll do some seed stage investing. We have a strategy that's led by a couple of our partners, Chad Packard, Sterling Snow, and Tyler Hogue, who kind of are leading out on our seed stage. But Series A is really the bread and butter for us. Yeah,
that makes sense. And you mentioned a couple here, but do you have a favorite investment, or one that's been memorable to you that you can speak to?
Oh gosh, there's so many. I'll touch on this company called Cloudflare. Actually, Cloudflare's the CEO grew up in Utah, but the company was based in San Francisco. And it was 3 individuals at Harvard. We got introduced to him from one of our I think he was an intern or an associate for us. And their original vision was, we will power the internet. I'm like, wow, that's pretty impressive. So our first $800,000 check that we put into that company, and by the way, we're like, this is a crazy enough bet that if it fails, whatever. Yeah. Roll forward to today, that company, I want to say last time I checked, had a $30 billion market cap, went public in 2019. So it was a 10-year journey for us. But that first $800,000 check in Cloudflare, when that company went public, now we had a lot more money invested, but it was worth about $800 million to our investors.
Wow.
Yeah. That one was super memorable. And then I'd say the other side of the coin was, I had a company where, I go to a board meeting and the CEO, the co-founder, CEO and CTO, which were the 2 co-founders. After the board meeting, we were going to go to a San Francisco Giants baseball game. We'd gotten a bunch of tickets in the bleachers. We're going to have a whole and I got invited to it. And I remember the CTO saying, I've had this head cold that I can't shake for 2 weeks. I'm passing on the game. I'm actually going to the doctor. Well, he goes to the doctor and he has a brain tumor.
Oh, wow.
And 4 weeks later, he passes away. And what I watched was that company, the set of investors, everybody rally around this guy's family and his wife. Because, by the way, his wife would have been financially destitute had we not figured something out. Now, that company wasn't a great outcome for us from an investment standpoint, but what happened, that event was heart-wrenching on so many levels, but the other side of the coin was what happened around this individual's family was pretty amazing.
Yeah.
And the memories, I can talk about the Cloudflares and the Fusion IOs and the Divvies and the Weaves and the all day long, Domos, what have you. They're amazing businesses. But then you have this other stuff where like the hardest thing for being a venture capitalist is like this is a failure. Things like what happened to this other company, all that kind of stuff is just, it's amazing, heart-wrenching, wonderful, crazy, all of those sorts of things.
Yeah, it's such a unique environment to be in where you're investing in these early stage groups and you're seeing the founding stories, you're meeting the founders, you're seeing their families, you're getting to know them on a different level than most people probably do. It's amazing. I see your billboards all the time. I love it because you get to see what you guys are investing in. Is that strategic? Is it just like, hey, we want to show what we're doing in the marketplace, with the Pelion investing in these different brands? I mean, I think it's really cool what you guys are doing.
Yeah, we've kind of been noodling. Well, we're spending a lot of time on what I'll say is how can we celebrate entrepreneurship?
Yeah.
And it was actually Latia Gar from our office, Sterling Snow, and Tyler Hogue. Sterling and Tyler were at Divvy, and then they joined us. And like they came to me with this vision. It was like, look, we can highlight our own companies, but we want to highlight entrepreneurship. So on that billboard, some of them are our companies. There's a lot of them who are not our companies.
Oh, really?
And what I guess the message that we want to say to everybody out there is building a company is hard. And so this is our way to say thank you and celebrate in a public and visual manner. And we're willing to say Pelion will raise our hand and we're going to celebrate you. If we're an investor, fantastic. If we're not an investor, we still want to celebrate. So that's how we think about it. And I got to tell you, it's been a ton of fun. It's not inexpensive.
Yeah.
And it's worth every nickel we spend because like the companies we back are amazing, but the companies we're not investors in, like I'll get a phone call or a text message from the CEO and he'll just tell me, it's like, you know what? That was fun. Like, Thank you. I took my whole team out there
to go see it or whatever.
To go see it. Yeah.
Are you giving them the heads up or are they just surprised by seeing their name on that billboard?
We always ask first.
Yeah.
And the reason we ask is because we don't ever want to do anything that the CEO and the companies don't want us to. Like if they say, hey, look, we got this thing happening. It's an announcement, but we prefer to fly under the radar. Because like some of the stuff we throw up there happened months ago. Mm-hmm. So yeah, we will always ask first before we do it.
Yeah, makes sense. So what's headcount right now at Pelion?
We're 30 people.
30 people. And what's your current role right now, Blake?
So I'm the managing partner.
So you're CEO, for lack of a better, I mean, I know that's not the term in the VC space, but running the show. From
a structural standpoint, that's how you think about it. But what I'll tell you is I have an amazing team and I wake up every morning just excited to go to work with that group of people because I got folks that are just like doing some, like, by the way, the people who are in their 20s, 30s, 40s, 50s, 60s, everybody gets to have a voice. Everybody I want to be engaged and part of the team. So I see my job is really to, what can I facilitate so this team can be the very best? If you think about sports teams, individuals don't win championships. Teams win championships. And so that's how we want to think about it. Everybody has a role. Everybody has what I call superpowers. And let's focus on those superpowers.
Yeah, so good. What's the future look like for Pelion? Next 5-10 years, and what are your goals?
You know what? My goal at a personal level is when my grandkids are adults, that Pelion is still scrappy, driving, great reputation, all of those sorts of things. And my grandkids can go, hey, they call me Opa. By the way, that's a German word for grandpa. My Opa was involved there. So that's what I hope. That's the vision that we have going forward, is we're just like we want to be involved with builders who are building great companies. We want to make sure that Pelion is continuing to build and to innovate ourselves.
Yeah, makes sense. Last couple questions, like we'll wrap up. I like to ask this because I think for entrepreneurs, money is a motivator in a lot of aspects, not the primary, hopefully, but people think about the exit or about a windfall or some sort of liquidity event. For you, given the success that you've had, how has money played a role in your life now that you've, I guess, quote unquote, kind of made it? I guess, how do you think about money? How do you think about your relationship with money and your finances?
It's a great question. And one, I think about it from our family perspective. I think about it from Pelion's perspective. I think about it from our entrepreneurial perspective. So our family kind of has, we want to grow our personal wealth. And through that is being investors, all that sort of stuff. Secondly is we want to share it. One of the things is, and I encourage everybody, Todd Peterson is amazing, and he and I have had lots of conversations. We're involved together at Primary Children's Hospital, the new hospital that was built in Lehigh. And so we've had these conversations around, when you think about sharing your wealth, Gail Miller has been an icon and a great mentor for us on how we want to think about it is, it doesn't matter if it's $10 or $10 million. What can I do today in my situation to share my wealth? And wealth is not necessarily always money. There's a lot of things that define wealth. So, grow it, share it. And then the last thing is enjoy it. I watch so many people where when they make money, it becomes a negative. It becomes like, people say, oh, I've come off the rails. Like you should be constantly having a conversation. And, when I think about enjoying it, that doesn't necessarily mean, it could mean, as a family, we're going to figure out and we're going to go to Disneyland together. Now Disneyland is an expensive ticket, but anybody can do Disneyland, but we're going to enjoy it. And so that's the sort of things that we think about. So grow it, share it, enjoy it in no particular order. And if you think about that, and by the way, I have an amazing wife and unbelievable kids who are grounded and always are a great reminder that, I fully believe that I'm just in charge. I have a stewardship, full stop. It's not mine. I just have a stewardship. And my stewardship is, am I doing good? And if you can answer yes to that, then you're probably going to be okay. And it doesn't matter, as I said earlier, 10 million or $10. Guess what? Figure out how to make sure you're growing it, sharing it, and enjoying it. And if you do that, that's the relationship we've arrived at on our side.
So good. That's great advice. Last question, Blake. If you could go back and give your 20-year-old self any piece of advice, what would that be?
It's a great question. I'd probably say don't get so stressed or emotional about things in the moment, because yesterday is over with. Learn from it. Tomorrow is a new day. Things do get better. I used to get so, and my wife, even my teammates at Pelion will remind me, it's like, dude, you're so intense sometimes. Like, you just chill. I have this partner, Chris Cooper, who's been with me since the early 90s. We've worked together, and he's like, dude, you just need to chill. And so, like, if I could go back to my 20-year-old, and I don't think I'd ever eliminate the fact that I'm just like wired a certain way, but I'd probably say, you know what? it's not, when things are rough, it's not that rough. And you can lean on other people. You don't have to do things yourself. Like, be vulnerable. Like, that's hard for me to be super vulnerable. And, if I could give my 20-year-old self that advice and like constantly practice that, because it took me a lot of years to like come to the conclusion on, hey, I can be vulnerable and it's going to be okay. Like I did not do that.
Yeah.
I thought it was a sign of weakness, and that's a weakness on my part. It's not a weakness. Like, if you can be vulnerable, and I wished I'd have had that advice as a 20-year-old, because I think I'd have been better a lot earlier.
Yeah, I struggle with that too. That's great advice, and no better way to end. Thanks so much for being here, Blake, and sharing your story.
Thanks for having me. This was fun.
Yeah, I really appreciate it. Thanks again.